on my latest forecast on gold and silver. Now, remember, about a week ago when we held the key levels on gold and silver, I flipped slightly bullish in the near term with a short-term upside move before we see the next leg down. We'll go over all of this. We'll check out where the charts are setting up. Let's get into them right now. So first off, we're going to take a look at gold. And you can see, again, this is a very simple TA kind of technical analysis type thing, right? So you have your pivot from October of 2025. That then became the blast point for this breakout that occurred in January, where gold ran up from about 4,300 all the way up to 5,600. Incredible vertical move. We then collapsed back to 43, 4,400.
Gareth Soloway explains that recently gold and silver prices showed a strong upward move, so he became slightly bullish for the short term. He says gold made a big jump from around 4,300 to 5,600, but then fell back and started forming a downward trend with lower highs and lower lows. However, since the price held at a support level, a short-term bounce is expected. He also mentions that around 46.50 is an important resistance level, where the price may struggle to go higher. Gareth further explains that many people jumped into gold and silver just to make quick profits when prices were rising fast, not for long-term safety. Now, as prices fluctuate, these short-term traders are getting pushed out of the market, which is a normal part of price movement. Before getting started, make sure to subscribe and enable notifications so you don't miss any updates. If you find the content helpful, hit the like button and feel free to share your thoughts in the comments.
We then bounced up. Notice we made a lower high. We then came down and we made a lower low, which keeps us in a bearish downward trend, but we held right here, which means that, okay, support has held, therefore you expect a near-term bounce. And that's exactly what we're getting here. Now, short term, where are we going to have resistance? Well, you can see it right here, right? So you had this little gap right in here, all right? We opened there. We then came down, we wicked below or tailed below, but we never closed below. We then hit it right there. And then once we broke, what does that mean? It means short term, there's going to be a level at 46.50 as resistance. So again, just letting the charts tell us what is going on and what is the most likely outcome. Now, as I always say, most likely doesn't mean guaranteed. The charts can break key levels. Once we get to 46.50, we have to watch. Can the bulls overpower the bears and push us above that level? We'll watch and see. Okay, so again, now what we're witnessing here is essentially the weak hands being kind of whipped out. Now, what do I mean by that? Well, at a certain point in January, when gold really started to rip above that 4,300 level, we saw investors piling in, not because they were being careful and they wanted to be secure, because the stock market was still making basically all-time highs, but more so because they looked at it as an easy get-rich-quick opportunity. Just like silver, right? Silver went parabolic. People weren't jumping in because they were like, oh, we have to be careful here. We have to kind of take our money from stocks, take our money out and dollars and put it into the metals. They were getting in. And listen, not everyone. I understand a lot of you guys do it for the right reasons, but a lot of people were getting in because it was a momentum trade. And every single day, gold was going up parabolically. Silver was going up parabolically. Now, those are the players.
Gareth Soloway says he is bullish on gold and silver for the long term, but believes weak investors still need to exit. In the short term, price may rise toward 46.50 to 48.65, but he expects another drop later, possibly below 4,400. For long-term buying, he prefers a stronger and safer level around 3,500, as markets often retest old levels before moving higher again. He also warns that market moves are not guaranteed and traders should stay cautious.
They have to get essentially, flipped out of the trade. Once it happens, then we resume our upward longer term trend on the metals. And you guys know I'm a long-term bull on gold and silver. It's just we got to get rid of this kind of, I call them the weak hands, the people that bought for other reasons than because it's a store of value, store of safety, right? So if we go back to the charts, we'll watch this 46.50 level closely. If we get through that, there's a small pivot around 48.65 right here. But ultimately, my fear is that we haven't wiped those weak hands out yet. And again, there's still people that think this trade is going to resume its parabolic move, and that's the issue right there. So what I'm anticipating is up to here, maybe higher, but some point we come back down. We finally take out this 43.44 level, 4,400 level. We then head down to our next key support. Now, why is that support? Well, you could see we had this beautiful upward move. Then we pulled back, and then we started to move up. So this area here will act as short-term technical support. Now, do I think that's the ultimate low? I personally don't. And listen, I could be wrong. I've been wrong before. I'll be wrong again. But ultimately, for me to buy the metal, now listen, I swing traded. I've gone long, I've gone short, we've gone long GDX, we've gone short GDX. But for me to literally buy the physical metal, I need it back at 3,500. For me, risk reward wise and quality of entry, that's the level. And it's also technically the most important level. So what do we see here? We have this area. Look at how many times price hammered here, then hammered here, then hammered there again and again and again before finally breaking up. What that tells us in technical analysis is when you have resistance that keeps hammering, we do eventually see it break out, but there's a tendency for it to come back to that level before it moves on with its...
Gareth Soloway explains that he is bullish on gold and silver in the long term, but believes weak investors still need to exit the market. In the short term, prices may rise toward 46.50 to 48.65, but he expects a drop later, possibly below 4,400. He prefers buying physical gold around 3,500 as a safer entry point since markets often retest old levels. He also points out hidden trend lines and key support levels for other metals like palladium and platinum, where prices may bounce. Overall, he expects a short-term rise for a few weeks, followed by a bigger decline again, so traders should stay careful.
I'll show you. I mean, this is more of a hidden trend line, but this line right here around 12.15, high pivot here, and then also see this little high right in here before we came up. And this is really important, guys. So look at this. So see how we got here, we kind of stalled, we then got above, but then retested, bounced, then broke below, retested, pulled back, and then look, boom, boom, and then up it goes. So it's actually what I would call a hidden trend line. And also look at this, it extends all the way back here. So this now becomes my buyable level where this is where I buy physical palladium. The only problem is the premiums are a little bit ridiculous on palladium, but nonetheless, that's the very, very good level there. And then platinum, lastly, guys, I know a lot of you guys love your platinum. This is my buy level down here. Pivot high, pivot high. We get down to about 1690 or so. That's my major level. Notice how the price keeps hitting this area, and we're getting a bounce, probably near term, a little bit more upside, and then it should roll over. All right, so that's my metals update, guys. Again, near term bullish on the metals for a continued bounce here over the next, let's say, 1, 2, maybe 3 weeks. Then watch out. We should see another big rollover and a move lower in the charts.
Gareth Soloway explains that gold and silver are in a short-term bounce after holding support, but the overall trend is still weak and needs weak hands to exit before a strong move up. He expects prices to rise toward resistance levels like 46.50 to 48.65, then likely fall again, possibly breaking below 4,400 and moving toward deeper support, with an ideal long-term buying level around 3,500. He also identifies hidden trend lines and key support zones in palladium and platinum, suggesting short-term upside for a few weeks followed by a bigger market drop. If you enjoy the content, please like this video, subscribe to the channel, and press the bell icon for timely updates. Furthermore, share your thoughts in the comment section. We appreciate your support, and we thank you for being with us. Wait for the next updates. Thank you.